Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday, March the 4th. We're starting off a new month here, and this is what I'm seeing today. I believe that we have a channel here. You can see that we actually have some resistance up here and some support down here that seems to be coming into play as well. So, but overall, I believe that we have just what I would call a mild or weak uptrend here. It's a possibility that this was a wedge and that we've had the break and we're coming back. But, what I do is I find it's obvious that line's right there. If you didn't see that line, you need to pay more attention to, what's going on and play with your lines. And then, you start trying to drag it down, and you can see that's even coming into play right there. Um, You see, we got it held below it, and then we got above it, and it tested it a few times. But when that one didn't hold right here, and it went on through it, then I pull it down to the next spot, and then I finally pulled it down to the next spot right there, and then you can see how we got stems on both sides, and that's exactly where we turned. Actually, if you bring it down to the lows there, um, seemed like I had it to the tick touching it earlier, but maybe not. I think that looks best right there. I think I actually drew it like that right there. Um, but anyway, it's yet to be seen because that's only the first, or really the second possible test. That's not really a real. Now, when you get all these touches up here, that's very strongly confirmed. Um, and coming up, we had a couple of touches, so that I felt pretty good about that one. But when you come down here and you've only had one touch, when it comes back down here next time, you got to be aware of this and see what happens, but don't be trying to buy it blindly. I talk about these things and people, hang on my every word and they take, and I just, sometimes I don't think about what I'm saying. It just kind of comes out and then people go and try it. Don't be trying to buy blindly because you hear me talk about it. I probably shouldn't even talk about it, but you got to know what you're doing. You can see how we're just moving on back up here. Um, Again, this could be a wedge and this could have been the break, and now we're going to do a retest and sell off. But I'm thinking we've got a larger channel here that we're working in, and I'd be shocked if we don't find resistance up here again. Um, but a couple of things I want to talk about before I go in and talk about the trades. But this was a fairly easy trading day for the most part. Nothing really out of the ordinary here. And I probably should extend this line on over here just in case, we find resistance right there. But again, a couple of little housekeeping things I want to bring up. And again, I have to be careful how I say anything because there's always somebody hanging on every word, and sometimes they read into things and they take things the wrong way or whatever. So this is not negative in any way, but I'm really getting probably 40 or 50 emails by 9 o'clock, 10 o'clock every day. And some of them are getting really complicated. Just, you got to put some thought in to answer it and study the chart and look at it. So I would prefer if you wouldn't send me a lot of questions during the trading hours, because most of the time I'm going to answer it in the video anyway. And I know people are just probably trying to get a little head start during the trading day to see if they're on the right track and things. But honestly, I can't really read those emails and concentrate on trading myself because I'm busy trading, trying to make my living as well. And so I'm not discouraging, don't take that the wrong way, I'm not discouraging emails. I want everybody to feel free to send me emails and I'll answer the questions. But what I'd like to ask you to do is just refrain from sending me emails until you see the video each day. And if I don't answer your question during the video, then fire away. And at my first opportunity, I'll be happy to answer your questions. But really what's happening is I'm just getting so many emails. When it used to be one or two here and there, it wasn't that big a deal because a lot of times I'm waiting on prices to come to certain areas before I enter anyway. But it's getting to the point now where I'm getting 40 or 50 before even 9 o'clock, and they just keep drifting in and repeats and things like that. So if you would, just to help me out, just to take some of the pressure off me, if you would just hold your emails until after the trading day. Try to watch the video because, like I said, most of the time I'm going to answer your question during the video, and if I don't, then fire away And also, if you're asking me a fairly detailed question, you got to put a picture of something there, because I'm getting emails from people all around the world, and we're on different time zones, and my time zone may not match yours. And so by saying the long entry at 10 o'clock, does that mean 10 o'clock my time, 10 o'clock? So give me a picture, and it really makes it easy, because then I can just glance at the picture, take a snapshot of your chart, put some arrows or some mark, do something like what I'm doing, and then ask your question, and it makes it a whole lot easier for me. So it will cut down on the time for me having to go back and try to search and figure out where you're talking about and so forth. So, I know that some of this stuff probably seems trivial, and it really is trivial, but when you're getting, 40 or 50 emails before 10 o'clock, then, it becomes a lot for me. And so the more I can do to make it easier, and the better I can answer your question and try to get you the right answer. And I want to give you the right answer, because a lot of times I've caught myself answering a question and then coming back and reviewing it later and realizing that they were asking something else, or I was looking at the wrong point and I gave them the wrong answer anyway. So, again, I'm not discouraging emails. That's not my point here, so don't read into that. Just try not to send me any complicated emails before noon, because I'm trying to trade and trying to make a living. And one other thing, and again, nothing negative here, but I get this every single day, at least 5 times a day. Hey, would you do a trading room? Would you call live trades? And just so everybody knows, I'm not going to do a trading room. I'm not going to call live trades. The money is in the trading. I'm a trader. I do the teaching on the side, and I enjoy what I do, but I don't want to take it any further than that, because I got into this to uncomplicate my life, and I don't want to complicate my life any more than it is. One day I may do a trading room, but when I do, you'll know about it. I'll mention it in the videos. I'll put it on the website. But for now, I'm a trader, and that's where I make my money. And I don't have, I don't have time to do a trading room, and I don't want to do, I mean, honestly, I don't want to do a trading room, because that's like a job that ties me down, that, you know, that, you know, it's more complicated than what I want my life to be at this point. Like I said, the money's in the trading. I'm a trader, so if I can, and I love helping people. So if I can help you, I will. But I'm not going to do it in a trading room. And my personal opinion is, people that want trading rooms, I'm not saying you can't learn anything from a trading room, but it becomes a crutch. People want me to call out the trades, and them follow along. And if so, I could kill over from a heart attack tomorrow, get run over by a bus, and then where's your income? You got to learn to do this on your own, and it can be done, but it just doesn't happen overnight. And most people don't have the dedication or the time or the ability to spend that much of their time learning this. It took me a long, long time, and it'll probably take you a long, long time. So we're about 8 minutes in this, and I haven't even talked about any trades yet. But these are just things that I like to throw out there, so I don't have to answer the same email over and over and over, because literally I'm getting 10 requests a day to do trading rooms, to call out trades, to tweet trades, to just everything. And for those of you that ask, don't take this negatively. I'm not coming down on you. I just don't want to have to answer that question, multiple times every single day. So I just thought it'd be easier to mention it in the video, and that way everybody knows where I stand up front. I mean, the bottom line is, I'm a trader. I'm not a teacher. I enjoy helping people, and I do seem to have a knack for doing this. So I'm happy to give you what I'm giving you here, but I'm just probably never going to dedicate any more than that to this. So hopefully that makes sense. And again, don't take it the wrong way. If you asked, you're probably only one of 100, so I'm not mad at you for asking. And I just figured, if I don't say it, people don't know, and they keep asking, so I'm saying it. And then that way people won't have to ask, and I won't have to keep answering the same email and giving the same explanation, because it really is a complicated answer. The answer is that it's not that I don't want to do a trading room or help people. The answer is that I'm a trader, and there's no money in. I mean, sure, I could make money by opening a trading room, but why spend all that time when I can trade and make more money trading in a couple hours every day, and then have the lifestyle. I mean, that's the reason I got into this, was for the lifestyle. So I wouldn't be married to a job, married to some kind of responsibility. I'm only responsible to me and my family only. I trade when I want to trade. I take off when I want to take off. So no way I want to get tied up into something where I'm obligated to come in every day. And honestly, my personal opinion is you're not going to learn to do what we're doing there. The learning comes from you sitting in front of the screen and getting your experience watching prices every day, and then comparing it to what I'm doing and doing your study time, figuring out why your trades worked, why they didn't work. And I can show you a lot of stuff, and it's all out there in the videos, and I can help you in that way, but you got to put in the time and effort. And I think a trading room is more like a crutch. And okay, there, I had about a 15-minute interruption. Probably won't feel like it on your side, but I can't remember exactly where we were. We were talking about, I think we were just talking about some housekeeping things. So we'll wrap it up at that, but and talk about the trades now. I think you can see this range. You can see all these lines coming into play here. They're all important. You can see we got back inside this this wedge here, and we tested that line a couple of times, and now we're going higher. But this was these are the kind of entries you got to catch. And there was another long here that hadn't really set up at the time. I didn't take it because I was done by them. There's a great long setup right there, and I'll go ahead and add it and talk about it because it is a great setup right there. But let's talk about the trades and wrap this up. And I'm ready to get out of here today. So my whole idea behind starting a trade earlier and do this earlier was so I could get out of here earlier every day, and then actually enjoy the fruits of my labor of my success as a trader. And that's what I hope each one of you would like to do as well at some point. So let's talk about the trade. We'll talk about the first one here. And this might have been a little confusing, but what this is, we had this gap right here. You see that gap from where the market closed and then reopened. And that's a gap. And those gaps don't last long. And so this is basically a two-legged correction that filled that gap. And then we've tested that area several times now. We just can't seem to get higher. Will we go higher this time? I don't know. We might. But, that's what this first move was. And so it was really tempting to go short right here. But a lot of times you're better to wait on a second entry. And we actually had a second entry down here, but this is not a good setup. There's two, now you got 1, 2, 3 overlapping bars, and 2 of them are dojis. Not really a good place to be going long. We're not back to the EMA. We haven't come back to test this. You realize we probably got to test this. We filled the gap. So when this big bearish bar came right here, this was a nice place to try to get short. And you can see it was a quick, easy scalp. And we came back and tested this area. We broke out. We tested it a few times. We had a really what I'd call a failed second entry short. You try to go, you got a new low, you pull back, you go short once, you pull back again, you go short twice. And we got a new low each time, but this is just like a little two-legged correction. You're looking for a possible high here, because even then you might, I was kind of looking at this at the time too. And so you figure we're going to have a retest of this high. We've had no real reversal. We're making higher highs and higher lows, and we've had no reversal type pattern yet. So you got to still be thinking long at this point. And you really might have even gone long right here, although I didn't mark it. But when we had this failed second entry short here, you had to go long there. But I'm getting ahead of myself. We went into this trading range right here. There was a little gap right there, and guess where that went to? It filled that gap and turned up, and that's like a reversal bar. It's it's similar to it's not a precise failed second entry short, but it's really like that. So you got to consider that. So you go long right there, and off it goes to the upside. Any runners right here would have been safe. You could have ridden this all the way back to the high. Excuse me there. Could have ridden this all the way back to the high side, which is where I would have considered exiting. Again, you've got a new low here, and then a first entry short, a second entry short that fails right off the EMA. Look at that reversal bar. Enough room to scalp out. Another easy scalp. It was almost, I was really interested in a short here, but I didn't like this bar. It's not a good bar, so you're better to wait on the second entry, which came here, and it's too low. But notice this move up here, that's a failed second entry long, so you really could have taken that short right there, but I just don't like all that overlap, and so I didn't take it, so I didn't mark it. I just didn't like the way it's set up. And so now we're coming back down and we're testing these lows again, and notice we make you got a new high right there, first entry short, second entry short, failure right there where all that support is. Great place to go long. And, you got a nice bar right there to get long above, and look at it take off back up to the high side again. But now you got a double top up here, and you got that one ticket. Look at that big reversal bar. You can't ignore that one. And you go short right there. Easy scalp. It wasn't anything more. It really, you almost could say that was a counter trend trade, because notice this, I had several people asking me what was going on here, and we're making higher highs and higher lows all the way. This is a weak uptrend, but you can't ignore this right here. So especially with that reversal bar, you might have wanted to wait on a second entry, which it really is. There's two legs up there, so it is a second entry, but usually it's better to wait for a second entry off that high. And but if you did that, then everything had changed, and you would have got trapped right there. So I like this short, to be honest, because it's two legs up, and it's a one tick failure above that double top that turned down and closed on its very low. I mean, those trades very rarely fail to get a scalp, and you had to be thinking the possible range here at this point too. But when we made this higher low here, then that really, and then made higher highs, then you had to really be thinking, we've got some kind of, up move, and you can see it coming into play here. Look, we're bouncing off that line again. Will we get above it? I don't know, but if we get a setup to go short, you got to be thinking about it. But now your wedge is getting really tight, so, and you see we tested it right there, and so it's holding. So you got to be careful right here, and this is all overlap, just like this was. But anyway, nice short here. I didn't like this one as much. You didn't get that tick higher. You got a double top. You got that bearish bar, but it's inside. You didn't get any kind of trap or anything. So not as nice a setup. You might have gotten tricked in there, but when that ended as a doji, I probably would have exited. And then again, I didn't like the second entry short here. So you wait, and then now you got a failed second entry long, turns down into a second entry short. Now you can go short, and you really could have gone short below the doji or that one. And where your stop would go would be here. There's your real signal bar, your highest point, and your stop would have to go above that. And look at that move down. Do you know it's going to do that? No, but that's why we hold runners. I had a really good idea we were going to rock it out of here. It took it a few minutes to get its momentum going, and it really took a little bit of work to get through the EMA, but you notice it did it. But really what will usually happen is if you break out of a little range like this and support, you got to watch it come back and test it and hold and then turn back up, and that's why that was such a good trade. But let me show you this right here, and again, I hesitate to mention this, but I got to mention it. When you get two overlapping bars that are this far away from the EMA after a huge move like that that goes right through previous kind of strong support, that's where you're likely to see a reversal. I dropped a limit order right there. It went 2 ticks against me and then turned up. This was the trade of the day right here because your runners were safe. Even if you didn't do that, the way you really should enter is above that little doji right there, and you put your stop right there. And after that move down, especially when you've been in a range, there's a good chance it's going to be a failed range. Even if that's a wedge, you're going to come back at some point and test the highs. And everybody's thinking short here. All the rookies and everybody's thinking short. But the smart traders that got short up here are all going to start taking profits. And eventually when they turn it up, it's going to start hitting stops, and then it runs like crazy. But there's a bunch that are going to ride this out. But when it reversed here, the last of them are going to give up, and look at that move. You can see how every bar was opening on its lows and closing on its highs till it got back up here to resistance again, and then it slows down. But that's why that exploded out of there. That was the final. There's a bunch of them that were willing to ride this out right here and not exit, hoping they get another leg down. But when it reverses, they give up and they know they got to exit, because look, if they didn't, now they're losing money, and we could go higher still. So that's why that happens. And I can remember when I was a new trader, this thing would be so bearish, and I'd enter right here, and then all of a sudden it would reverse. I'm like, why did that happen? But the reason that happens is that there's stops all up through here, and there's all these people that got short that suddenly have to exit if they want to make any money on their trade. And so they start exiting, and the market moves in two, so you're looking for another leg that's at least similar to probably to that one on the way back up. I mean, it could have gone to right here and failed and turned down, and we got another leg like this, but, you can't bank on that. The odds are we really kind of traded up into this range, so the bias is up. We failed out the top, we failed out the bottom, and now we may go higher. We may fail out the top again and come back down. I don't know. You got to wait and see. But those were the trades for today, and I know I spent half the day talking about some housekeeping stuff, but again, I think it's important. But I want to share one other thing with you too, and I'll probably do a complete video on this later this week. I'm not going to do it today. I'm going to take it easy the rest of the day. And but following the stop placement, the second part, and this was something I didn't really consider until somebody sent me an email and saying that what would happen, like this trade. This is a good example right here. You've got this huge bearish move, but what these people are doing, they're not entering below the signal bar. They're waiting for confirmation that it's going to go lower. And guess what? If you wait till down here to enter, you're too late. We've got this stuff down to a science. When you see the signal bar, your entries one tick below that or back up inside that bar, so you could have gotten short either right at the edge of the bar or one tick into it with a limit order. You might have even got filled right there. I doubt it, but right there, guaranteed you got filled. So your goal is to get short up here near these highs as close as you can, so you got room to scalp out, because if you start getting short down in here, you're too late. This is where the smart guys are going to start taking profits and raise the market again. So your entry point is as much or more critical than where you put your stop. So don't, you can't wait too late to enter. So I hope that makes sense to you. And here's another good example. You could have entered below this bar or this bar, but if you wait to enter here and it bounces at these lows, which it could, and it didn't go higher though, then you don't get out and you get run out of your trade, or you get stopped out and it goes higher. So the best examples are the ones coming down. Here's another one. When this ticked higher right here and turned down, you could have gone short on a stop right there, because there's a little bit of a trap and it's a double top now. And if you'd have gone short right here, then you get 1, 2, 3, 4, 5. That's exactly what it takes to get out of that trade, and then it bounces. But if you wait and get short right here, then it bounces on you. It ended up going lower, so it would have worked out, but you don't know that's going to happen, and it could have come back up and tested this high again, and you get stopped out when you had the trade right. You just entered too long. I can't tell you how many times when the trade sets up, it gets exactly enough ticks to get you out, and then it bounces or turns. And so that's why it's so critical to enter. You got to enter under your signal bar or above your signal bar, in this case right here. Now this is with trend, so you got the odds on your side, and you can see which of these trades were the best. It's always, the bias is up. And look where all the best moves came from. They're to the upside. And the ones to the downside keep failing. It might get pushed for a minute and then it gets choppy. But look what happens on the upside. It blasts out of there every time. And it didn't finally go down faster until we got a reversal pattern. Notice this double top. Then we made a lower low and then a lower high. That's a reversal pattern. That's a perfect reversal pattern. And then look at that move down. And there's no other way to, that's how you have to catch these. When you see a reversal pattern where it's strong resistance or a reversal pattern at strong support, then you got to take it. And, and I can tell you what happened right here, why this blasted out of there, because look at that big bearish bar, and people didn't have these lines there. They didn't see what was going on, and they think prices are going to trend back down, and they go short right there, and they get trapped, and it reverses, and then everybody starts hitting stops, and everybody exits it and pushes it back to the high again. You got to draw your lines. You got to know where they're at. You got to know what you're doing. So hopefully that all makes sense. We're 25 minutes into this. I'm not going to stretch it out any longer. Again, I'll probably do a video that talks more about entering at the proper places, but you got to pay attention to that. You got to follow the rules and that means every rule. We've got this down to a science, and if you start monkeying with the rules and changing them, thinking that you're doing something wise, trust me, you're probably doing the exact opposite or exact wrong thing, because common sense does not work in trading. That's one thing that makes trading so hard, is that the more common sense you got, probably the worse trader you're going to be. And I know that sounds odd, but common sense tells you, you got to get some confirmation that it's moving in your direction before you enter. But by doing that, the move is over before you get into it. There's very rare that you're going to catch these kind of moves unless you're willing to go short where everybody else is going long, and that's hard to do. Or go long where everybody else is going short down here. When this thing broke lower, there were a bunch of people that watched this thinking, I need to get short here. I need to get short here. I tell you what, if it breaks below here, I'm getting short. And that's the word. That's where you need to be. That's where I was thinking about getting long. As soon as we got to here, this is where I'm looking to get long. And I got long as soon as I saw the best setup. And look at that move out of that. This was easy money here. And there was another entry. This is just a two-legged correction that came back and tested that support, and look at it go. And this is the one that really gets everybody, because this is the final, kind of like the final straw. Well, if it goes any higher than this, I really got to exit. And anybody that did get lucky and make any money down, they gave it all back probably. And they probably decided to go long right up here, and then now it'll probably reverse and come back down on them. And I know this stuff because I did it myself back in the day before I knew any better. So again, we got the rules down to a science. You got to know the rules and you got to follow them, because if you try to deviate, it only takes one simple thing that doesn't seem like a big deal, and you won't make money. I promise you that. So anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.